All righty, welcome everybody. It is Tuesday, October 8th, 2024, live trading room. We're going to try to do these again every Tuesday and Thursday at 10:30 a.m. Eastern. We'll do them the best we can. We'll try to keep up with that unless I have something that comes up in the meantime. So, yes, I am on the head start to the No Shave November. I have no idea. I just was lazy for a while and now I got this. So, it's all good. We'll figure it out. But let's jump in. Let's take a quick look at the markets, and then we'll figure out, we'll take a look at the portfolio. We're going to run through really the trade plan, see what's going on with everything. We'll let some more people in. So again, welcome. And again, we will try to do this every Tuesday and Thursday, 10:30 a.m. Eastern. At least until I have something that prevents me from jumping on one of those 2 days at that time, then we maybe switch the times. Then Igor will continue to do a lot of Wednesday, Friday stuff. Maybe he and I do Wednesdays. I do have a podcast with Uncle Tony Rehan, Tony from Mexico today. So we'll have that for you guys later tonight. He and I are going to do that this afternoon. So trying to keep that going. So if you have any questions for myself or for Tony for later today, you can certainly pop those in. All right, let's take a look at what's going on in the markets. All right, we'll hop back on here. You don't need to see my picture, so let me get off camera. And again, if you have questions, I will monitor chat the best I can. Let me pop it out here so I've got it. All right. All right, let's get going. So ES this morning, I mean, we've just been in this sideways channel for now, almost 4 weeks of sideways action. Overall, on the weekly, it's still a pretty nice stair step, higher high, higher low, higher high, higher low, higher high, higher low, and now a higher high, and we have not yet really had a higher low in there. Overall, on the weekly, I mean, you can maybe look at this as a potential lower high, higher low, and then back to the higher high. So either way, we're pretty bullish on the weekly chart. We are not overdone at all. We have not hit anything above 70 for a while, and you can see the divergence in this. On this high, you know, we were way up here around 82 on the RSI. On this high, we were up here around, 79 on the RSI. And then for these highs, we've only hit about 65 on the RSI. So definite divergence forming here, which again makes me cautious. We're still bullish. The trend is up. We had nice bounces off of this 21 EMA. Boom, 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 boom. Moving up. We hit the top of the Bollinger Band, but now we've pulled away from it as it continues to climb. So Bollinger Band's opening up here on the weekly. 3 ATRs headed, due north here as well. So we could really pull back to almost 5,500 and still have a nice little bounce on this. When we look at the daily charts, they've been a bit weak, but just a sideways consolidation, not really doing anything. MACD is pretty much flat. RSI is pretty much flat. And the momentum on the stochastic momentum indicator has been heading lower. Okay. But slowly not doing a whole lot of anything doesn't mean that I want to really do anything. What I like is when stochastic momentum gets down under the 40 and starts to reverse up, I think those are awesome times to get in. When it's crossing down below, potentially it's a time to get out, but you're fighting against the weekly. And I like to make sure that the weekly stochastic momentum is heading the same direction as the daily. That means I think you get a good chance to see that. All right. So overall, ES, this sideways value area, we're just in value here, bouncing off the 13-day EMA, bouncing off the 21-day EMA on the daily. I think if we break above these, if we can hit this all-time high, I think this thing really could move higher. I am watching these Bollinger Bands pinching in. Does that mean anything? No, it does mean that volatility is coming in a bit overall. Now we'll take a look at the VIX and some of those things here today before we place or do any trades. And I did play. I was trying to hold off on a trade, but it filled on me. It was a good till cancel order on an oil naked put, which filled for a winner. So I was trying to hold off on anything closing before our meeting, but I'll share that one with you. But yes, just bullish, but cautious here. And if we break out to these new highs, I think we get at least another decent leg up to maybe 6,000 area or so. And I think if we hit that 6,000, I think to me that's an area that I would look to see if we get some pullback. But I certainly think 6,000 is doable. You've got Bollinger Bands pinching in, so we're definitely Bollinger Bands are inside. And if we look at the same chart here with the squeeze, you can see that as the Bollinger Bands, are pinching inside here, momentum is definitely coming down here if we're using the squeeze. I'm sticking with the stochastic momentum indicator for now, simply because I like more watching the momentum on some of these trades. So that's why I stick with the STOMO or the stochastic momentum indicator. Gives me a good sense of where's the trend, where's the momentum on these trends. So I do like the stochastic momentum indicator. All right, let's take a look at oil. Oil getting the living daylights beat out of it today. So, which is nice for the strangle, not great for the 112s and the naked puts, but you can't win them all. So definite downtrend here. Overall, everything bearish until this week. So this week we came down, we popped off of support down here on the weekly. So a nice bounce right off support, just past the Bollinger Bands here. We keep getting outside of it for like a day or so, and then we snap back up. So last week was a good up week on oil. We all know we felt probably a little pain on the strangles, but overall, this was a great opportunity for 112s naked puts, and we have a bunch of those on oil. This week now with the move up, we triggered we've been in a bullish PSAR. We had a 1 day bearish and then back to bullish, well above this. A nice pullback here, breaking the Bollinger Bands, significantly yesterday, pulling back in, just coming down to the 50 with the 13 and the 21 EMAs rising. We're near overdone. So can oil continue to move higher? It can. Right now, I don't know that it does without further Middle East flare-ups happening, but oil still overall bullish, and this is a nice entry point here, in my opinion, on oil on the weekly. When that stochastic momentum gets down into the oversold area, starts to curl up, MACD is moving higher. So I think this is a good opportunity for naked puts, credit spreads, 112s. I think that's all good on oil. So I think those are good. If you liked them last week on that move, you should like them even more on this pullback today. So if you haven't had a chance to get in on something that's maybe a put credit spread or some naked puts or 112s on oil, today oil is giving you a chance to get back in. So nice stuff today. MACD and RSI, stochastic momentum, all kind of topping and rolling over here as we hit the 200-day moving average, well above the Bollinger Band, hitting almost a 3 ATR. So again, oil just a little bit overdone. Doesn't mean it can't just snap and move higher. All it takes is something to happen in the Middle East, but it's giving us some really nice relief on a strangle that we have. Our 112, it's okay. It's down $140. We closed a naked put today. We're around 90% winner, and then we've still got a 112 at about 65%. I've got a rolled naked put around 75% in here. So those are all good. Oil still the largest holding I have. Or at least it's doggone close. Oh no, ES eked it out. So I think that's with me closing a naked put today. ES is kind of taking the lead back. So ES, definitely bullish. Like where we are, nice consolidation. This thing's getting ready, potentially, I think, to pop to the upside. I think one more gasp before the end of the year is pretty likely, but we'll see what happens. Bonds, so the biggest pain in the neck now isn't oil. Oil's actually fine. All of my oil trades combined are up nicely. Just one strangle had some pressure, but that's it. But bonds is the bigger pain. But if you're looking at the weekly chart on bonds, it's still, moving sideways. Overall, you've got a bit of now of a more of a higher, not now, but you had a higher high. You had some higher lows in here. This is still a higher low on this pullback. Momentum, though, is just coming out of bonds. It has been coming out for 4 weeks now since the Fed rate cut, which is, to me, bananas. But you've had this coming out. Why? I was telling you that I really don't think that we were going to do another 50 in November and 25 in December. Everyone was talking about that Fed rate tool, which is, I don't know, a tool for nothing. It gives you some idea, but it's really not too accurate more than a week or two out, in my opinion, because you've got plenty of things to keep track of, and it can change on a moment's notice. All it takes is one report to completely change that thing. So I don't think you can base a whole lot of anything on that. I didn't really think it was too accurate. I really don't think we were going to do another 75 before the end of the year, but we have some big things coming up this week. So nothing really on the docket today. A couple of FOMC members speaking. I don't know that they'll move the needle today. Tomorrow we get some of the meeting minutes. I don't know that really moves the needle, but that's at 2 o'clock tomorrow. The biggest things are going to happen later this week. On Thursday, we're going to get CPI. So we got core CPI year over year, month over month, all of that. But you get core CPI on Thursday, and then we're going to get PPI on Friday. So CPI Thursday, PPI Friday. I think what we'll be looking for are signs that inflation is not going away. And the Fed started to look more at employment numbers. And with employment growing, not shrinking, okay, that's what's I think concerning people, that the Fed's not going to cut as aggressively or keep their rate cuts going. That if the economy's heating up again and employment is strong, then that's going to be negative for rates. So Fed for rate cuts, I should say. And if rate cuts aren't going to happen, then bonds are going to feel some effects. Now, on the daily chart, certainly ugly. We know we've been down for 4 weeks in a row, and we can all see what's going on. However, I think we're pretty doggone overdone in here. So if we want to get a little technical and start to draw in some potential pivot point areas here, I think this is certainly one right around this 120 and 12 ticks. So I think that's an area to keep an eye on. You could actually even go right back here and pull this one across on the weekly as well. So we're right at this level. So somewhere in these two levels here, okay, I think you have some support. You're right near the 50 on the weekly. You're near this uptrend line that we've been hanging on to for a while, and we've hit it multiple times. So I think it's still valid until it isn't. But this is putting us below the Bollinger Bands, below the 3 ATR level. So I think, and now on the RSI, bonds are overdone. They're oversold on RSI, and they're pretty significantly oversold on the stochastic momentum. I think this is going a little too far, in my opinion. So we'll see. But we're right at what I consider to be some definite support level opportunities in here. And oops, I didn't mean to do that. Go back. Let's go back. Nice error. Okay, bear with me. All right, we'll try to keep this moving with you guys. But what I wanted to look at was the fib retracements. And there's a couple areas that we could, launch some fibs from. We'll take a look at this one right in here. I haven't looked at it yet to see where we are, but you can see that also right in this same 120 area is the 50% retracement as well from this move off of the lows back in April. So not only do we have support right where we are today, which is a pivot point here, that we also have a second pivot point right below it around 120. We have the 200-day at 120, and then we also have the 50% retracement at 120. So I think there's good support in here around 120, and that's what we'll keep an eye on. Now, if that breaks, then we'll be looking at maybe the 118, which is also around this trend line, this 118, 119 area. So we've got a naked put at 114. I'm not worried about that thing at all. We've got naked calls, which are doing well here. So that naked calls, we've had those on for 4 days. We're up almost $400 on the one at 25% in 4 days. We might consider taking that off here. Then I've also got a 112, which is down. I know we're looking at this. I'm not going. We'll talk about the account in a minute, but on ZB, we have a 112. The naked puts are at a 2x, but they're at 117, which is way down here. I'm not going to do anything with those. So I'm not closing those out at a 2x loss at this point in time. I will be more than happy to roll those out, or if need be, potentially I could take assignment on those and roll and wheel those, but I am not going to stop out on those. Now, we also got a naked put at 119 down in here. That thing's down at a 2x. I'm not doing anything with that either, so I am not closing any of these bond naked puts at 2x's. I will roll that out if I need to as well. We've also got and that's only 7 days old, so we'll leave that thing alone. And then we've got another naked put at 121, which is right where we are right now. That thing's down, not quite a 2x. I'm not going to do anything with that either right now. So I'm not making any moves on any of these naked puts on bonds. I will roll out if I need to. To me, it's a time factor. We've got we've got some reports coming up Friday. Can they adversely affect us? They can. So I think you have to do what is right for you. I'm going to hang here and look to roll. But if you want to stick to your 2x plan because rolling is not your thing on it, or you are not willing to take assignment, then you have to do what's right for you. CPI and PPI Thursday and Friday will have some impact significantly on bonds one way or the other. If they're showing that inflation is under control, I think bonds start to rise. If they're showing that inflation is starting to rear its head again, I think could be potentially a little more negative for bonds. However, when the Fed started cutting, which again, this is ridiculousness, but there's no reason for bonds to tail off this badly unless they felt that the Fed was way, way, way wrong. So are we seeing more inflation today than we were a month ago when the Fed first cut? I don't know. I just think the Fed was a little over aggressive, but on it. I still thought at 25 was the right move. They went 50, and we'll see what happens on bonds. But I've also got another naked call, which is at 50% winner in 4 days. I'm probably going to take some of these naked calls off today. They've been good winners. I can book some nice trades. I can always put new ones on, but I think if we bounce at all here, I'm going to continue to kind of semi-strangle bonds in here a bit with naked puts and potentially naked calls. I don't know that we're going to break back above this high at 127. I don't know that we're going to go all the way back down to 107 here. But I think if I continue to keep selling puts somewhere in this, along this uptrend line, somewhere around this 118-ish level, I think that's the plan. But I'd have no problem putting on some naked calls in it. I don't think we snap significantly. Anyway, there's ZB. ZN is going to be the exact same type of a setup. I'm not in anything in ZN right now. This would be potentially a pivot point down in here. Now, these are shorter term. Okay, so these are definitely shorter term. Let's extend this thing out because this could potentially turn into a bit of a resistance level. Okay. So we came to, this was resistance, then support. We broke it. We're down. We're well below the 3 ATR. We're below the Bollinger Band. We're right on this uptrend line. So we're right on this uptrend line. We're a little bit above it. You could even look at this as a potential support level. This is where bears tried to take it last time, and the bulls pushed it back higher. Here, we're right at that level today. We're holding on to that level today. So I think, give or take a few ticks either way. ZN, this is not the worst spot to be in either. Oversold, not oversold on the weekly though. Okay, weekly could still have some more downside potentially on ZN. Now it's a shorter term. It's a 10-year. So ZN's the 10-year, which is, I think, a little bit more susceptible to what the Fed is doing and not necessarily the long term. But the 10-year has had rates rising nicely. It's fallen off. I think either one of them is a trade opportunity here. I will still continue to trade bonds moving forward. But we've got trades on now, so we'll let those trades cook for a bit. All right, gold. Nice pullback in gold. Here, and you've got the US dollar, okay, has fallen to these lows. Okay, pretty good support area here, which again, don't know if it makes as much sense on the US dollar, but I'll take a look at the technicals here. Support, bounced off of it. The US dollar's been making a pretty strong move higher. As this moves higher, you're going to see gold and bonds both moving lower, but you've got gold moving lower, but not, it's just so overdone here on the weekly. I mean, very overbought. I think a pullback here is kind of welcome and needed. So in fact, let's move this here a bit. Okay. So I think gold continuing this uptrend here, nice pullback to the 21 EMA on the daily, overbought completely on the weekly, has been overbought and falling on the daily, which is nice. I think if we look at this on a stochastic momentum chart, let's take a look at where the momentum is on gold. So let's clean these up a tad. Okay. Momentum obviously has been coming down. We're overbought, tipping over. I think you just wait a little bit here on gold, and let's see if we find an area to bounce off of and put a new trade on. To me, I'm just kind of sticking away from it at this point in time. I don't see a trade in gold that makes great sense to me right now. All right, let's look at copper, other metals. Okay. Copper's all over the place. Okay, so copper's all over the place. It was in this channel at one point, broke out of the channel to the upside, got a little carried away, and now the momentum's been coming out of copper as well. It got carried away on this China stimulus move. Okay, blasted it way higher. I think it's a good opportunity here. I'm not opposed here on copper to get long. I like it better than gold. Momentum is still decent on the weekly. It's not overbought. on the weekly. It's getting a nice pullback here. I think at this area here, I think you can take a look at potentially putting on something on copper. What I'd like to see is, let's see if the momentum slows and starts to reverse. So I think you can be a little patient on copper in here. Right, silver on the weekly ran up, banged into resistance, previous resistance, another area here. Take this off. I don't think this thing means a whole lot of anything in here. Take these off. Okay, uptrend was broken on silver. It's just rolling over. I think you just wait until you come back down here and we get a bounce off of maybe the 50 here, around somewhere around 30. You got this trend line that's moving higher. Okay, so I think you watch this trend line around, the 29, 30 mark, and you wait for momentum to kind of regain its move here. I think when momentum gets overdone, I think that gives you great swing trade areas here, like we've had. So just be patient. Okay. Nothing to do here, nothing to see here. I think potentially selling a call credit spread was not the worst, is not the worst thing in here. Let's watch if we get any more moving over. I think if you wanted to trade it, a call credit spread would be the way to trade it, triggering a bearish PSAR today. So again, if you want to cover silver and trade silver, to me right now, the momentum is down. Bollinger Bands are tightening, so I don't know how much downward move you had. I don't know if it'll regain anytime soon against this momentum, but I think we're close to potentially, up here, call credit spread, something up and away. I think silver is good. All right, Aussie dollar. We are out of Aussie dollar trades right now. Last one we just closed for a nice little winner. This thing's been moving down. The US dollar's been moving higher. So if you remember that chart from a moment ago, okay, big move up in the US dollar off of support. Okay. Big move down here after China is cooling off a tad. I just keep these blue lines on for a channel. Okay. I think this thing is setting up nicely for another opportunity, in my opinion, for a strangle. If I have some BP, this is what I'm taking a look at. I like strangle opportunity in here on this recent sell-off. Well, let's see if this thing starts to chill a bit. But I like the fact that we pulled back in. We're close to 21 again on the weekly chart. So we're in a good area here. If we come down a little bit more, I think it'll even be a better setup. But I don't mind it in here. Okay, we're also right on this trend line. So we'll see what happens, overall on 6A. But I think if you wanted to put a strangle on here, it would not be the worst opportunity. The euro, kind of a similar situation. It's bottomed out on the momentum. Okay, not that it can't go down any further. Here, broke out of these channels. We'll get rid of these. Boom, boom. Actually, we can turn that thing into a bit of a trend line. Okay, a little longer term trend line, and then you've probably got a shorter term one in here right now. Okay, that we're right at. Not a bad spot to get in. I'd like to see a little more sideways, and I'd like to see us get closer to the 21 here. But I think the euro is also not a bad setup. All right, and then lastly, RTY. I am bullish in here. I still think this thing makes a run at some point here. It's been getting, just sideways trending on it. The moment I think this is an opportunity to get in. I think a strangle here is still good. I'm just more nervous about the upside, but you get the Bollinger Bands pinching in. I think this thing is a nice strangle opportunity on RTY. But I think if you want to not give yourself, a little bit of nervousness to the upside, I think the downside is a better bet. So I think a 112, which is hard on RTY, or just credit spreads, naked puts, something like that on RTY. I think on the daily, a short-term trade is not bad. I don't think I want to go anything long-term. We have the election coming up. Election is about a month away from yesterday. Yeah, today, a month from today is the election. Keep forgetting today's Tuesday. So I really don't want to be holding a ton of extra longs on like RTY or anything else in there. And then I do want to cover the NASDAQ because this thing to me looks more bullish than any of them. Yeah, the S&P sideways could be moving higher, could be breaking out, but look at the momentum on the weekly. You got the MACD reversing here and rising. You got RSI moving higher. Okay? You've got the stochastic momentum definitely pushing higher on this good momentum here on the weekly. And then on the daily here, I think bouncing off this 21 and starting to move higher, I think you're going to see the Bollinger Bands start to tick up on this. I think the NASDAQ looks better for a trade here, especially like a credit spread or a 112 or something like that. So I like that opportunity as well. All right. Let's see, I've covered most everything you guys have asked for. I don't know if there's anything else you want to take a quick look at, but we'll put our lazy trader hat on right now. Is there anything we want to get into with a leap? And I really don't want to add a whole lot of anything at this point in time. We are in Google. Okay, so we've got a leap on Google. And by the way, I summed up all of the bill today. We'll get into MicroStrategy 100%. So we are in Google with leaps. I like it. I don't, I think it's just a good, steady, company here. I don't know that it's going to be as aggressive growing as some of the other ones. I think there's competition growing for Google, especially on the search side, but I think their revenue is good. They'll figure out a way to monetize. They always do. But I love the stochastic momentum swing here on the weekly off this low. We got into Google 21 days ago, so basically 3 weeks ago on this kind of this bounce and move. So we've been in Google. I like where it is here, losing a little momentum in here, but I think Google, good opportunity. I still think on the weekly, this is an opportunity here to see us maybe make some moves. Will we hit the new highs? I don't know if we'll get there, but I do like the longer term prospects on Google. We are in a IWM butterfly in there. I'm not going to do anything with that. All right, JP Morgan, another trade that we are in. Okay. This gave us, I felt, a decent opportunity to get in. So JP Morgan, we didn't do a long, it's about 120 days out. This thing's up just fractionally. Here we've been in it for 2 weeks, so right around this move off of the 21 on the weekly. Momentum's good on the daily. I like where we are. This thing's just fighting with the moving averages here. If we get a little bit of a run, look how tight these Bollinger Bands are here. I think this thing is something to watch. And really, if you look at a bit of a pattern forming, it's just easier to start it here. Right. So you've got tighten it up. All right. So you got a nice uptrend. Let's see if we can fix it even better. Okay. You got a nice symmetrical triangle here, almost like perfectly at the apex here of it, give or take, these lines a little bit one way or the other. Moving higher to the upside, I like where we are on JP Morgan. Yes, so we got earnings on Friday. So would I add one if I was you? I probably would not if you're already in it. I'm looking for this thing to hopefully move to the upside, but we're going to get a move either way. This thing's pinching in. It is ready to break one way or the other. We're down at the 180 mark. So our naked put leap is way down at 180, way down here at the 3 ATR level, where we've had a previous reversal off the lows. So I'm okay with JP Morgan. If I get assigned at 180, fine. Give them, you can assign me down here. I will be more than happy to write covered calls on JP Morgan. All right, MicroStrategy. Making its move. So on the weekly here, I've been talking about this thing. We've been adding more and more to this. I'm very bullish on Bitcoin. We'll take a look at Bitcoin here as well in just a second. But on the weekly chart, just buy, sell, buy, sell, buy, breakout. Now this thing's running. So MicroStrategy cranking its way to the upside, huge moves the last 3 days on this thing, soaring higher, overbought and rising, but not on the weekly. I think this thing has more upside to go. Let's see how MicroStrategy can go. I am not going to put a cap on this. We have a leap that's up 54% in about 3 months, which is nice, down at 70. Okay, you can't even see it on my chart, but the leap is down here in this area. And then we've also we just added another naked put out 73 days, 4 days ago. That thing's up 16% now as well. So MicroStrategy, loving it. I like Bitcoin. If we take a quick look at the Bitcoin chart as well, I think Bitcoin was in this bull flag formation. It hasn't performed as well as MicroStrategy, but I think you're heading back up to the top of this flag. Okay. Everything's stacked. 13 above the 21, above the 50, above the 200. You've got the momentum that had come well down, starting to bottom out here. But then on the weekly here, this thing I think looks decent from a momentum standpoint. And all your moving averages are stacked. This was your opportunity to buy Bitcoin, in my opinion, back here when you hit the Bollinger Band and the 50-day and you bounced and stochastic momentum started to move. That was an opportunity, in my opinion, on Bitcoin, about 52. And we're sitting at about 62 and change right now. So I like Bitcoin. I like where we are. If you're into Ethereum as well, I think this thing is starting to give you an opportunity. I'm not a big Ethereum fan, but others are. And I think you could look in here at really good, solid support. Can't draw today. Man, we came down, banged right on it, bounced off, hit it again, and bounced off. Ethereum's just moving itself sideways, but it is definitely, in my opinion, oversold. It doesn't look anything like, to me, the quality that Bitcoin has on Ethereum. I'm sticking with my MicroStrategy. But if you also want to find another way to potentially look into things, I think looking at coin here is down at a level that I think it's purchasable in here. So I think trading coin is an opportunity down in here in this channel. So something to keep an eye on overall. It's showing up on my scans as something that is oversold on the stochastic momentum on the weekly. And usually when we've been oversold, we've got decent bounces each time. So bounce here. And, I'm sure you guys can see my mouse, but there was a bounce here. Okay. Then oversold, moved higher, bounced there, oversold here, gigantic move higher here on that oversold. This is pretty much where that move started, was right in here. Okay. So that was a giant move. And then now we're down here again and starting to curl up. Every time that's happened on this, and the momentum started to head higher on the weeklies here, we have gotten pretty good moves to the upside. Okay. Here's the move on the daily. Okay. Another move on the daily. Okay? And now we're back down here again. I think coin is something, I think from a short-term trade standpoint. So anyway, if these aren't your thing, that's fine. I'll try to go quicker. If this is helpful to you, then that's fine as well. But we're in MicroStrategy. We are also in NVIDIA, but I do like coin. So we're in NVIDIA here. We added to more and more NVIDIA. Here, this thing is breaking out of this triangle pattern. 2 big moves to the upside. Momentum is massive to the upside. I like it, both the weekly and the daily, which is why we added more NVIDIA. We've got naked puts that are about 26 days old. They're at a 90% winner right now, so we'll probably be taking those off. I unfortunately didn't have enough in that. I was playing it to hopefully get it signed, and that didn't happen. But 4 days ago, we added a bunch more naked puts. Those are up 30% now in that lazy trader account. I think you can keep adding in the teens to low 100 naked puts. Obviously, these things are a little bit of a runaway train right now, but I'm really, really bullish now on NVIDIA. It is having more than a day. It is having a 3-week. So it has been nicely moving higher for at least 2 weeks to really 3 weeks now, off of the 114 level here that we hit. So, fantastic 2 weeks from 114 to 134. If you caught the move, great. I'm very bullish on NVIDIA here. It's going to get overbought. Then we'll see, but I'm not going to bet against it. I do not love I would not want to play this thing necessarily for earnings being overbought. But we'll see what happens. It looks good. All right. Oxy is another one. So this is our energy plays. Oxy's been having a really nice move based upon the oil moves until today. But I love Oxy down here. You can see again, oversold stochastic momentum, big bounce. Oversold stochastic momentum in here. Oops, I knew that was going to happen. Okay. Down in here, decent bounce eventually. Took a minute, but it still bounced. Okay. Here, you had a bounce, didn't last long, and tipped over. Now you're getting another bit of a potential bounce setting up. If you liked it before and you missed the run, I think the opportunity is in here. I have a Jade Lizard on. That Jade Lizard's up 24% now in 21 days. Totally fine. I would not be opposed to wanting to get in, especially if oil, on this oil pullback here. I think Oxy is still a play for me, but now I want to, on the weekly, so longer term from a leap standpoint, I think Oxy is a play. All right. We are in SPY. SPY's doing its thing. With SPY on the lazy trader, which we'll take a look at the account. We already covered. We covered that. We'll cover it in the account. We're up overall. We're up, a couple $1,000 in SPY. It's just the fact that when the IVR has gone to 40, it's increasing obviously the price of the puts. Okay, so while there's decay happening, the price of the puts is still increasing, which is offsetting a lot of that decay. It's just taking forever on these SPY naked puts to come off right now. But I like where we are. We'll talk about SVOL later. We've already talked about bonds. We've talked about oil. Let's quickly take a look at 2 other trades I gave you guys. I talked about Boeing on Sunday. Okay. I love this oversold move. Again, oversold on stochastic momentum and moving higher. Boom, big move. Over here, moving higher. Boom, nice move to the upside. We're now down in that area again. Back here, you can barely see it on this chart, but back here too, boom, gigantic move. Okay, almost 100% mover. We're back down to this range again on Boeing. You're starting to see it coming to life on the daily. So I think this thing sets up as both a credit spread and some other, obviously you have earnings coming up on Boeing. I don't know how great they're going to be. Earnings are on 10/23. If you want to do something before that, I think a credit spread, short credit spread is worthy. Yeah, I'll jump into TMF here with you guys. I only have about 10 more minutes, so we'll try to go quick. And then I think, and this scan is for any stochastic momentum under 0, but rising on the weekly. So this is where I scan to find opportunities for potentially leaps on stocks that I liked. It's only searching my watch list. So it's only something that would be in my watch list, which is limited to just companies I like. But I think Micron looks interesting here. I think Oxy, we already covered. I think Qualcomm looks interesting here. I think this is an opportunity on Qualcomm to potentially get in on that. Schwab, which is coming up with earnings on the 15th. Schwab's just been sideways. I still think this is not a bad spot for Schwab. Snow, if you're into that, it's not my favorite company. It's not as high quality, but I do follow it. But you're down in an area where potentially you could get a bit of a bounce. And again, on these weekly bounces, just look at where the stochastic momentum, it gives you great momentum opportunities. We're not at a level that I'd like to see on Zscaler here, but it's still not a bad opportunity in a downtrend. And then Applied Materials, good company, okay, way down here, and now making moves again. And when this stochastic momentum gets cranking on the weekly, these things really start to see some nice moves to the upside. And then Palantir is just gone, so I can't chase it. I'd like to be in it, but I can't. All right, and then TMF, somebody said. So let's take a look at TMF as well. TMF, getting the daylights beat out of it here. We're in this thing. It's just sideways trending on the weekly here. It's been moving solidly lower on the daily. So, and our TMF trade's down. It's our biggest losing trade because our naked puts are down. However, I am actually below. My naked puts are right at 55. I'm actually below those. I'm leaving this on. Okay. I've got 24 days. If it doesn't bounce above 55 by then, I'm willing to take assignment on TMF and continue to wheel this thing. I do own shares. TMF does have a distribution. We're now potentially at some low areas here. We're oversold on both. Again, we know this on bonds, but we're oversold here with stochastic momentum. I'm going to look for this thing to start moving up if I can continue to write covered calls on it. Been a tough trade, and it's down, but I'm willing to, again, take some assignment around 55. We'll hold this thing, and we'll keep writing calls against it, and we'll keep taking in a dividend with it as well. So there's a lot of different things that we've just covered. Let's just quickly go through the main account. So more or less, I just covered what's in the Lazy Trader account. I'm pretty happy with where we are on that. Let's take a look at what's in here. We did close a naked put today. So this was a naked put. We closed it for 90% winner. So if I'm trying to keep up with you guys, yeah, I'll talk about SVOL quickly. So we got about 7 minutes left. So let's keep cranking. This naked put here was the October 17th naked put. It was a remainder of an old 112 trade that we had on. This was what, the 57. Okay, so we closed this today for a winner. Okay, at 4 cents on 10/8. Nice win. This one was a 80. It was 88% winner, so I didn't quite hit the 90. It was 88% winner, but we'll take that. So 88% winner on this oil 112 that we closed the naked puts on. So that was good. That also freed up some buying power today. we're sitting here on a strangle. It's down 100%. I'm not worried about this strangle at this point in time. We're right in the middle of the strangle. It's all good. We got a 112 here. This one's down slightly because of the naked puts. It's only 4 days old, but that's okay. Nothing to do there. Here, we've got a 112 trade. This thing's up 63%. Nothing to do here. We really don't have anything to do on it. We just let that thing go. And then we have this rolled naked put. This thing's up almost $5,000 now. It's getting closer to us taking it off at 21 cents. So that's in good shape. Nothing to do there. 38 days left. We're coming down the stretch on that. ES, nothing's happening because the IV has cranked up, which means any theta decay is being offset. We do have great theta decay. It's just that with volatility up, it's pushed the prices up. So it's just impacting us a little bit on the net lick, but I'm not worried about any of these trades so far. We do have a naked call. I'm going to let that thing run for a little bit. It's way up at 63.50. It's just giving me a little, it was a free trade more or less because I have all these naked puts on with these 112s. So we'll see what happens with that. This hedge is taking forever to come off. We're sitting at 53 days. At 60 days, I will force this thing out. So I will close these down and buy more long puts on this thing. It's taking forever. But that's the problem you have when you're trying to put these hedges on in rising volatility scenarios. But nothing, I'm not going to do anything. It's not going to do anything to me. I've already got a couple of them working. We've got a nice 120-day naked put here. It's only 18 days old. It's just down $100 or so. Nothing to do there. Long-term 111s are all in good shape. Nothing to do with those. The calendarized FB 112. This is just the put debit spread version. It's fine. Nothing to do there with the markets moving up. It's pretty much flat, $56. The new regenerating hedge that I replaced the fly version with this hedge. This thing's up nicely, $225. That wasn't even the goal, but we'll take the fact that this is up, and it's already paying off a little bit. But nothing to do here until we get to 50% on those. This hedge, we've already closed down one tranche of the shorts. We added new shorts, which are down because of volatility being up in the markets. But then we're up on these. So overall, it's fine. It's giving me 20 longs, okay, to 10 shorts. So 20 longs to 10 shorts. So now it's 40 to 20, plus another 10 to 10 here. So we've got, the makings of all of our hedges are in good shape. And then another calendarized put debit spread. This is basically the new 112 that we're running. And if we look at here, hedge, oops, dang it. Okay, this hedge down, which is what you expect hedges to do when you're close to new all-time highs. Put debit spread for 10 more days. Put debit spread for 10 more days. We've got a 112 trade on, expires in 23 days, and we're still sitting at 75% because we're just not getting the decay with IV. If IV starts to drop, we'll see this thing, hit 90 pretty quickly. If not, I'm just going to keep letting it go. We'll get 90. I mean, we are 1,000 points away from it in 23 days. It seems stupid that this thing is not at 90 yet, but we're not. Another put debit spread. Here's a naked put of the new 112 that we have on. That's fine too. We are doing the 112. We did it calendarized. This is up nicely, up 30% in 7 days. Can't beat that. This one's up nicely, 111. They're just not decaying quickly. Here's another naked put from that FB 112. This thing has 38 days to go. This one's only got 23 days left in the tank. And then we're up on all of these naked puts. Nothing to do here. And then the remaining XL 112 put debit spread. So we're in good shape. Gold's just the remaining put debit spread from a trade. And then bonds, like I said, I'm not doing anything with these bonds at all right now. Bonds are recovering a bit on the day. I just think this is a good spot in the bonds. Yeah, this naked put's down almost 2x. This one's down almost 2x, but not quite. I'm fine. I will roll these. I'm not worried about it. All right, so there's where we are on bonds. We got our bill. We got our TLT, which is now down. It was up 25%. Now it's down. We could exercise it if we want to. We can continue to write covered calls on this. I'm just going to wait till TLT gives me a stochastic momentum move to the upside. It typically takes 7 days. So I'll wait. We're oversold here. I'm going to wait the 7 days or so, see if we get a move to the upside on the stochastic momentum. And then I'll write another covered call. And I'll just keep writing covered calls on these while I wait for this trade to materialize or not materialize. Either way, I'm good. All right, quick questions here, and I've got to run. So I've got another meeting popping up in here. SVOL questions from you guys. Let me look at the accounts quickly while we're talking. All right, so the SVOL trade is only sitting in the lazy trader account. My plan with SVOL. So what I want to do with SVOL is something I'm just going to hang on to. The decay on SVOL is for one of these leveraged type of ETFs or funky things. It's pretty solid. It just moves pretty much just sideways to maybe slightly down, but it's up. It's always around the 22 and a half mark on it. So if you look, in here, we're almost always in this range. I mean, it looks, if you really look at this range, it's pretty doggone tight. It ranges from, for the most part, 22 to 23, somewhere in there. You could even go down to 21 and a half to 23. That's the range for it. So I like it. Whenever volatility gets cranked up, the price drops, which gives us an opportunity to add more to it. So what I'm doing with SVOL is similar to Bill, okay, but it pays a really decent dividend. And if you look at the Discord, if you go to the SVOL, you can see that we've added, that we had a nice, it's a small distribution. What, $84 was the most recent distribution, but that was sitting on 300 shares. Okay, so you're getting about 30 cents a share on this thing. So what I'm doing is as I'm generating income in the lazy trader account, I'm adding to my SVOL. I think this is a great spot to add more SVOL. If you can get it down here at 21, I think what I'm going to do today is probably add, we're up to 600 shares now. We just added 300 more shares there. So our dividend should double on this thing. But if you're getting $84 on, what was it, 300 times, 21 or so, I mean, it's a pretty good dividend that we get on SVOL. Give me one more second. I know I got to get rolling here. Where was my SVOL? So the initial trade, cost me about $5,000, somewhere in there. What, 300 times what I originally bought it at, 22, 6,600. So roughly on $6,600. Okay, we're making like 1.3% a month on SVOL. So SVOL is generating about 1.3% a month. You can do the math on that. Okay, but that's about 15% a year or so on SVOL. So I like where we are on it. I think anytime I can add more to it on these VIX spikes, like today, this is perfect. So I think this is an area where you want to be adding, in my opinion, to SVOL, if that's a plan for you. So that's my plan. I will continue to keep adding and adding to it. I eventually think that the bill distributions will start to drop. Now, bill is a little bit more friendly to my buying power than SVOL is, so I probably won't do a 1-for-1 type of thing. But SVOL generates a pretty good distribution, and you can keep buying it on VIX spikes, which right now I think is a great opportunity. Okay, doing covered strangles. Okay, so you're selling the you're selling the puts and the calls on it, so which is nice. So Tech Trader posting that. It's hard for everyone. If you're in Tasty, you can't really sell. You got to go get approval to sell naked puts on it. But yeah, if you want to write sell calls against it, what have you, I just like the fact that it's generating a pretty good dividend. So I'm just stinking money into it here. My cost basis, I can lower it even more if I buy some here. So I'll probably add another couple hundred shares today on this drop, and we'll keep playing it. So I don't dividend reinvest it right now. It doesn't mean you can't or you shouldn't, but I don't dividend reinvest on either one of these because I don't know how long I'll have them. But you certainly can. I mean, there's nothing wrong with dividend reinvesting it. So I might take a look at that in my TMF as well. TMF is probably not going to be a long-term hold, but nothing wrong with dividend reinvesting if these are yours. And as I get assigned on stuff like SCHD, which is in there, I will definitely probably reinvest dividends on those. Might as well let those continue to work. All right. Hopefully this was helpful for you guys. You got something out of it today, gave you some trades. I've got to jump for a training, but I hope this is helpful. We'll just keep doing this every Tuesday, Thursday, give you some trade ideas, take a look at what's out there today. We'll see you guys in the Discord. Hang in there. Life is good. We'll see you guys.